Hello, Lions Creek Middle School students. Denzel here. And in personal finance, we are going to go over some life insurance terms that are very important to know. So when you get older, you'll be able to choose the right vehicle for you as you get older, for your family, for yourself, right? Makes sense? Cool. So I'm going to do one term at a time, and I'm going to break it up into different sections so it's really easy for you to understand it, comprehend it, and be able to apply it in your life when you get older. All right, the whole point really behind all these videos is so that you can acquire the knowledge while you're so young, 12, 13, 14 years old, and you have 4 to 5 years to acquire all this knowledge and information so that when you become an adult, you'll be able to make informed decisions with your personal finance, right? Which is the primary objective, okay? So, the reason why we're going over insurance is because those are one of the 3 major concepts pertaining to money, your personal finance, that have never failed, right? And I have a video that explains those 3 major concepts, right? That you definitely should watch. So, the first term we're going to go over is whole life. Okay, whole life insurance is one of the most popular insurance policies out there today in the world. Okay, so that's why I chose whole life first. And to understand how it works, you have to track the money. Okay, so the money that you actually pay into a whole life policy goes into 2 places called premiums and cash value. Premiums is the cost of the whole life policy. It's the cost of insurance that you, the client, you, the customer, pays the company to insure your life if you were to die suddenly, right? So that's what the premiums are. It's the cost of the insurance. Cash value, okay, is another place where your money goes and it grows over time. So it becomes this savings asset that you would accumulate, right? So whole life, right, insures you for your whole entire life. Money goes into 2 places, premiums and cash value. And there's 3 major parts inside of whole life that you receive as the customer. So you will receive a death benefit, right? Or in other words, they use the word face amount. Right? Which is the amount of money you would receive if you were to die suddenly, right? So the death benefit of the face amount is the amount of money that your family would get if you were to die tragically or suddenly you were to die, right? And the second major component or part is that the premiums are the same. So you pay the same amount every single year for as long as you live, okay? And the third part is that the cash value grows over time as you get older. So whole life has these 3 major components that you receive, okay? So what is whole life? Whole life insurance protects an individual for their whole entire life, okay? Where does the money go that you pay? It goes into premiums, cost of insurance, cash value, a savings portion that grows money over time, right, that you can have access to while you're living. So whole life has living benefits and also has death benefits, okay? And when an individual acquires a whole life policy, they receive a death benefit, guaranteed. The premiums stay the same, the cash value grows. Very simple, okay? And part of your homework is to go ahead and ask me any question pertaining to whole life that you don't understand, and we'll go over it, in the classroom. We'll go over it again. But this is just a brief overview of what it is, how it works, right? And what you receive as the individual, what does your family get, and how the money works inside of the policy itself.